Hi there, welcome to Kneppy Invest and welcome to the 18th of July 2025. Time is currently 3:06 p.m. So we have about or just over 1 hour left of trading today and this week. Now, if yesterday was a great day for the ASX, what does that make today? Because wowzers. I'll talk about that in a second. But before that, what is the agenda for today's video? We'll go through the ASX today, have a look at the best and worst performing sectors, indices, companies. Then we'll transition into the top 5 stocks of the day. Another day where the stock of the day is an absolute no-brainer. A company that released their Appendix 4C, and it was just a little bit of commentary in regards to revenue. In fact, they released this announcement at 9:58 a.m., so they left it to the last second. And not surprised the share price is up. However, I wouldn't have expected it to be up this much. Of course, that company is Mesoblast. A few other nice announcements in the top 5. And also, the chart of the day was supposed to be Mesoblast. I think I might have mentioned that yesterday, and I had to change it to another company. So I've included IGO as a chart of the day. Okay, so let's have a look at what's happened on the ASX today. But before that, I'm not sure what has caused our day. It's just been incredible. But the most important thing here for me, in terms of technicals, is look at this chart. And today really stands out. So the XGO has been struggling to get above 8,600 for a while, particularly the last 2 weeks, just been going up and down, up and down. And finally today we have seen a breakout. So if this was an individual company chart, I'd be really excited. I'd be like, whoa, this is exactly what you want to see. Not only all-time highs, but it's been a really good day and a solid green candlestick, which is exactly what you want. So this makes me really bullish. I don't understand why. What is the market saying? It seems like the market is completely ignoring anything to do with tariffs. Probably they don't believe that Trump will do anything significant when it comes to tariffs, even though it will. If we go down this path, it will significantly decrease economic growth in the United States, particularly in the short term. But it seems like the market is completely ignoring that right now. And even though I'm probably not sure if I agree with the market at this point in time, it is not wise to go contrary to the market in these sort of situations. I do know some people love being contrarian investors, but I probably would not be in that boat right now because a fairly bullish move on the XJO. Now, whether this continues over the next few weeks remains to be seen, but a significant move in this indice today. And this is probably throughout. If we have a look at the XAO, which is very similar to the XJO, small caps have had a good day. That's breaking out. In fact, you could even argue this was breaking out a few days ago. XTL, yep, this one's breaking out. XTX, breaking out. Even the banks may be looking okay. Not as good, but okay. And mining. Mining was in a downtrend and looks like that downtrend has come to an end or is coming to an end as we speak. So some bullish signs when it comes to some of these indices. And it's really interesting. I was listening to a podcast this morning, and this podcast, I think it was in the Motley Fool United States podcast, talking about the market being in a bubble. Is this a bubble? And one said the S&P 500, if you look at the PE ratio of the S&P 500, it's well above historical norms. So in a way, we are in a bubble as a whole market, potentially, but individual companies maybe not. And I still know that there are some experts out there who think the Mag 7 are significantly overvalued in a bubble, but when you delve into them, no, they're not. In fact, NVIDIA has a PE ratio, forward-looking PE ratio, below 40, which is not that high for a company that is significantly growing. Okay, so a really good day, and this is me being bullish. So a lot of times I have no idea which way the market is going, what the market is thinking. Today, this was a bullish sign. It's not 100% bullish, but definitely a bullish sign for the XJO and, well, the ASX really, not just the XJO. Okay, now on to the rest of the market today. And look at green across the board. Green across the board. If your portfolio is down today, I sympathize with you. Let's be empathetic for those who've had a bad day. And you can just see this chart here. All the three major indices, well, not major indices, but XAO and XTX have been rising all through the day. Now, I did have a quick look at the American futures. Yeah, they're up a little bit, but not all that much. 0.12%, 0.11%. Overnight, NASDAQ up 0.76, Dow Jones up 0.52. So I wasn't really expecting this sort of day. And if we have a look at Asian markets, Nikkei is actually down and Hang Seng's up 0.65%. And this is something I've seen in the ASX in recent weeks, that we seem to be a little bit more bullish than the rest of the world, a little bit more. And I did actually have a look at the TSX, the Canadian indice, and that was up 0.86%. So maybe I should have had a look at that early today. But even comparing to the TSX, we've had a really good day. And if we have a look at the TSX, this has just gone bonkers since the tariff debacle. Okay, let's go back. By the way, what I'm going to do now is I'm just going to have a look at the 1 minute chart just to see if there was any sort of news flow through the day. Typically, we don't see much news, macroeconomic news released on Friday. In fact, if you have a look at trading economics, it's Japan inflation, talking about gold, dollar, oil, ASX 200 rallies to fresh high. US futures inch higher. Yeah, that's probably a good way to phrase it. But if we have a look at the 1 minute chart, yeah, it's just, there's nothing here to suggest that anything during the day has really seen an explosion in the market or led to the explosion in the market. We didn't see any major 1 minute pop up in the market. So it's just been positive sentiment. Maybe it was just a technical signal. Maybe that's all it was, just a technical signal. Breakout, start buying, start buying. And I'll be honest with you, I did buy something today, or a few things today. I will be honest, a few trading stocks today, no high quality companies, just some few trades. Getting lots of signals, by the way. Lots of signals out there. Now, this positive sentiment can shift fairly quickly, so just keep that in mind. Okay, I'm going on tangents. Look at the sectors. Healthcare, materials, all up by over 2%. Discretionary financials, IT, up between 1% and 2%. And the worst performing sector is energy, up 0.54%. What a day. Even staples, you might expect staples to be up not all that much, more defensive, up 0.83%. Gold may be down, no, gold up 0.82%. ASX 20 up 1.88%. What a day. Let's have a look at the ASX 20. And I'm assuming 19 companies up, and there's going to be one company that is down. And what company could that be? Brambles. I don't know. Let's have a look. Yep, one company down. Oh, it's just based off probability. One company must be down. Why my mum might help pop the CBA bubble. Wow, someone has a high opinion of their mum. Ooh, ego. Okay, I'm saying that in jest. I'm pretty sure it's about something else. Okay, Brambles. Should we stick with Brambles? Because it's a 5% chance of getting it right. Well, it's actually less than that. Actually, more than that, because we know ANZ's not down. Energy. Woodside. I'm going to say Woodside just because energy is down by the least. Or energy is up by the least. I'm going to say Woodside. I'm not confident though. Oh, it's Pro Medicus. There you go. Pro Medicus. I wouldn't have even thought about that one. In fact, I did record a video before this one. The 5 highest quality companies on the ASX. I asked this question to myself last night in bed about 10 p.m. and Pro Medicus was the first company that came to mind. So yes, I do think Pro Medicus might be the highest quality company on the ASX. Okay, best performing companies, CSL, also in the top 5 highest quality companies on the ASX. BHP, Macquarie, Westpac, Rio Tinto, Wesfarmers. And what company did I say? Woodside. Woodside's up 1 point. Fun enough, 16 companies up by more than 1%. And Telstra Group should have been my pick. Yeah, Telstra Group would have been a good pick. But anyway, Pro Medicus. There you go. Okay. Top gainers. Okay, we're going to have a lot of companies. We're going to have lithium companies here. The reason I say that is there was a Chinese lithium mine close or something. I'm pretty sure it's mentioned in Capital Brief. Yeah, lithium miners surge after China's Zhang mining told to halt production. And in fact, I was owning 1 lithium miner before today. Now I own 3 because I'm getting a lot of signals. Okay, now this is just individual companies, not lithium itself, which I would prefer two signals there. But anyway, so expect a few lithium companies in this list and of the top gainers, and that's about it. Okay. Tally Resources is IPO, so just ignore that one. It's not an ETF. It's not in the ETF sector. I'm pretty sure it's probably a mining exploring company. And the one company I do want to discuss in the top gainers is Askari Metals, share price up 50%. I don't have to tell you about Mesoblast. Look at their share price there. And we have Sierra Resources, something to do with graphite probably. Not seeing as much Novonix. There we go, Novonix. Not seeing a lot of lithium companies. It must be in the top gainers by market cap. Let's have a look. Pilbara, there you go. Liontown, there you go. Clarity Pharmaceuticals, not lithium. Novonix, Rare Earths, Botanics, go Botanics. Core Lithium, Talga, Renascore. Okay. So the one company I do want to discuss is Askari, was it? AS2. Share price up 50%. Now, it did come from a low price at 0.8 cents. So I do get a little bit wary about these sort of companies, but I still remember that I did buy by Oxen at 1.2 cents, and the share price of that company, by the way, is 4.5. So it's almost gone up fourfold since then. So just because I'm a little bit nervous about buying companies whose share price might be close to 1 cent or below 1 cent, it doesn't necessarily mean or negates me from taking a position. Anyway, so let's have a look at Askari. Now, what might deter me from taking a position in Askari is it's a story stock. It's a mining exploring company, but high-grade copper mineralization in drilling at Qatar target. They also released a presentation 4 days ago. Might have a look at this presentation. I do like presentations. So I did actually open this up, have a quick look, and then moved on. So they do talk about copper, 3.2% copper, 14.33 meters, 35.51 meters at 0.82% copper. And then I just moved on. I saw that and went, yeah, like when it comes to gold hits, I actually do know gold hits in the back of my mind, and I'm starting to learn silver hits, but I just can't look at these numbers and go, wow. And the other thing I did notice here, that the depth was quite deep, 152.55 meters. So ingrained in my mind is that anything deeper than 100 meters is actually quite deep. Anyway, so what you could do is how to read copper drilling results. I've done this in the past. Stockheed has been good for me in the past. Stockheed. And here we go. Operating copper mines currently have an average rate of 0.53%, and the current copper price, don't really care about that. Oh, they don't really mention. They just then talk about zinc. So that's a really boring little thing. So you think you can drill how to read nickel and copper. Maybe this one's better. Where's copper? Where are you, copper? Here we go, copper. Okay, so they actually do go into depth about copper here. The latter is typically low grade in copper. I'm just looking for copper hits. For Hironsky, don't know what that means, a 3 to 20 plus meter hit at 2% copper or above is a good hit in a VMS ore body. So this is definitely, I think, an article you want to read a little bit more closely than what I'm doing right now. Anyway, so possibly the market does like this hit. I was a little bit unsure initially. Company must be fairly small as well. In fact, if we go back to the top gainers by percentage change, company has a market cap of 4.85 million after share price increased 50%. Okay, so let's just have a look at the chart for Askari. And chart, well-defined downtrend. Well-defined downtrend. Look at that. This has been a capital destroyer for shareholders. Share price moved into downtrend back in March 2023. We're talking about over 2 years ago. Share price at that point was 50 cents. Now it's 1.2 cents. This is why technical analysis can be really helpful. Because if you're just using technical analysis, there'd be no way you would have been holding shares in this company at any point during this. There's no way, just by looking at this. I wouldn't have been buying anything. Now, today is the first time we've seen something interesting happen with this chart. Share price. No, we've had a really big spike in volume, fairly similar than what we saw back in February, but that little spike in volume, it didn't last. So that's a very important thing. We need to see some more volume coming in the next few days. Now, we have seen a little bit of selling, which is understandable. Share price got to 1.5 cents. Sort of the same thing we saw in February, but I think this has a better chance of being successful in the longer term because a lot of shareholders who bought at high prices probably sold out by now. A lot of them have. They would, particularly the share price going sideways for a while, they would have become bored. And we might have seen some of those shareholders set out today. So not the best looking chart, but definitely not as bad as what we have seen in the past for Askari metals, but definitely not for me. It's more of a story stock. Okay, now let's go to the top losers today. And Sipper, Burgundy Diamonds. So Burgundy Diamonds is the company I'm going to talk about when it comes to top losers. But other than that, nothing much here. I can see, look at the turnover, really low turnover. So really, there's nothing to talk about. So if you did have a bad day in your portfolio, if your portfolio had a bad day today, probably more than likely you've held on to, or you've got quite a few low liquidity small companies in your portfolio, or maybe you're highly concentrated in the company that's had a bad day. So maybe you bought Orpheus Uranium many years ago, and share price down 12.5%, and you're the biggest shareholder, maybe. But look at this. There's nothing much to talk about except Burgundy Diamond Mines. So we'll have a look at that company in a second. By market cap. Oh, Yancoal's in my top 5, by the way. What else? I think Andean Silver did a capital raising. Am I right? Some silver company did a capital raising. Yeah, there we go. Strongly supported $30 million placement. What else? Yeah, there's nothing here. There is nothing much here. Okay, so Burgundy Diamonds. What's happened with that company today? I did learn something today. Share price down 20.51%. They have released an operational update. I did learn something today that the rough diamond market is currently challenging. Yes. So this company advises that in response to continuing challenging market conditions for the rough diamond market is prioritizing mining and processing of its higher margin or at ECATI at reduced costs. So it looks like they have a few mines here. And Point Lake open pit operation, well, they're suspending operations there. They do mention it somewhere here. Here it is, accordingly, in the 4th paragraph down, accordingly, Burgundy has made the decision to temporarily suspend open pit mining at Point Lake, which constitutes a shift from surface mining operations in the short term. So they're suspending operations because it's a challenging rough diamond market. Who would have thought that? Who would have thought that? Anyway, so that's Burgundy Diamonds Mines. And I will be honest with you, I have never looked at this company in the past. I do know it exists, but I've never looked at it. And let's have a look at the chart. Oh, yeah. Jeez. Eek. Share price in the well-defined downtrend since July 2000. So 1 year ago. So in 1 year, the share price has dropped from 18 cents to 3.2. So we're talking about, what's that? 15 cents out of 18 times that by 5. We're talking about 50, 65, 70 to 75% drop in share price. And yeah, again, technical analysis would have saved you. Okay, volume hasn't been that big today. In fact, the share price has risen. Share price is not below the lows we saw recently, by the way. Yeah, anyway. Okay, now on to the top 5 stocks of the day, starting with company coming in at number 5, a company I did own in the past. Hillgrove Resources, share price up 8.33%. Now, a few companies just missed getting to the top 5, including EVZ, BHP, just missed, and maybe 1 or 2 others. I've got 8 companies here. Oh, no, I've already talked about Burgundy. Okay, so Hillgrove Resources released their Appendix 5B today. This is a copper producer. I used to own it. I thought, when I bought some shares, it wasn't a copper producer, but it was expected to go into production. And I just sold out because I just couldn't help myself. I was getting a little bit impatient about waiting until they reached that inflection point, and you'll see what I mean. Anyway, so Hillgrove Resources released their Appendix 5B, and I'm still waiting. So I was hoping maybe I would see something in this particular Appendix 5B, but I didn't see it. And I do mention in continued improvements in operational performance. So 10.7% increase in mine development, 11.7% increase in tons processed, but lower production at a grade of 0.77%. So there's a nice quote from, well, maybe not nice, but there's a pretty big quote from the CEO, Managing Director, Bob Fulker. In June, production was lower than we expected due to a minor issue with two of the mining areas, which delayed access to higher grade copper ore. So again, another company and their management sort of didn't realize things can go wrong. So I do prefer companies' managements who tend to be fairly conservative with their forecasting, their guidance, because things go wrong all the time. And it seems like companies put out guidance and it's like the best case scenario. That's it. And then they're surprised why they miss guidance. Anyway, now, typically when I open up these sort of announcements, I go straight to the cash flow report, or the Appendix 5B. Here we go. So receipts, 29.462 million, and it was a fair bit lower than what they've seen in previous quarters. In fact, I do have it up here somewhere. That's yesterday's video, so we can get rid of view, and I have to search for HGO. Here it is. And we'll get rid of MVP. There we go. Yeah, so this was actually the lowest receipts since this time last year. In fact, receipts got up to 41 million in the March quarter. Now, that's not necessarily a bad thing. There could be a bit of a timing issue between receipts and revenue, but the company was not operating cash flow positive, even though they received 3.64 million in GST or other. Don't know what that is. So they were not operating cash flow positive, and typically mining companies do spend a fair bit of money in capital expenditure, and they did almost 10 million in capital expenditure. So the company did burn through a fair bit of cash this particular quarter. We're talking about $10 million. They did a capital raising, looks like, but still cash fell, even with that capital raising, cash fell from 10 or 15 million to $10.6 million. Now, they might have to, oh, by the way, do they have any debt? No, they don't. What if they do have to answer? No, they don't. Of course they don't. Yeah, even though they're burning through a lot of cash, they say here they've got 24 quarters of funding available. They don't. They don't. All right. So I wasn't that enthusiastic by this report, but the market likes it. Share price up 8.33%. Maybe they had some sort of outlook or anything. I don't know. I didn't see that. You can see how the cash on hand, receivables, unsold concentrate. So receivables are quite high here, 11.9 million. So that does actually suggest that they should have a fair bit of receipts coming through in the next 3 months, because receivables did grow by a fair bit. So that is one of the problems with Appendix 5Bs and 4Cs. You don't see a change in working capital unless they mention it. And that would be a significant change, which means change in working capital includes inventory and receivables and payables. And if there is a sizable increase in receivables and no sizable increase in inventories or payables, then that is going to be harming the cash flow. It makes sense. You have more receivables that you haven't collected, and hopefully a lot of those receivables will be coming in the next quarter. So maybe not as bad a quarter as I was thinking, and maybe the market is smarter than me. So let's have a little chart for Hillgrove. And I think the share price the chart's not looking amazing. No. So nothing for me to get excited about this chart for Hillgrove. In fact, the share price has been dropping for a while now, looking very promising back towards the start of 2024 before they went into production. But yeah, not my favorite looking chart. And even though the share price is up a fair bit today, it was at this level a few days ago. So it's it's not a breakout or anything. But anyway, that's Hillgrove. Coming in at number 5. Coming in number 4, we have McPhersons, not L, a company that sells products, health products, I think. Share price up 11.32% on expected financial year 25 results and transformation update. I actually did find this quite positive. Or maybe not heaps positive, but definitely a little bit positive. So financial revenue expected to be 139 million. So a lot of revenue, not a lot of profit. So this company does exist on fairly low margins. They have 4 out of 5 core brands achieving year-on-year revenue growth. So Manicare, Lady Jane, Swispers, Fusion Health, no idea what they do, and Dr. Lewin. Overall revenue down 8.4%, impacted by trading in China. But underlying EBITDA for financial year 25, 7 to 7.5 million. Majority of that was in the second half. And second half, EBITDA 5 to 5.5. So if you sort of analyze that, you'd say EBITDA about $10 million. You shouldn't do that though. They also, what else? Transformation update. A year of transitioning from McPhersons direct-to-store operating model to a new third-party warehousing and pharmacy wholesaler model, which is now in operation. I wonder if that's going to be successful in the long term. I don't know, because I don't know much about this company. But it did seem like a fairly good update from the company. And yeah, so let's have a look at the chart for McPhersons. Now, I do know the chart for this company looked awful for the longest time. And I'm just wondering if this is like the first sign of things starting to turn around. Could this be a time to get excited about McPhersons? Not there quite yet. If you have a look at the weekly chart, this company does seem to go up and down in... Yeah, definitely not high quality. Just look at this chart. Definitely not high quality. And this company was quite favored back in 2019. Share price went up a fair bit, went from like $1 to $3.40. And then this company got absolutely destroyed in the second half of 2020. And that set in place a long-term downtrend, which is still going on. I'm not sure if I'm there yet, saying this is a breakout. I don't think I'm there yet. And today's one-day candlestick is not the best. We have seen a little bit of selling coming in, which is understandable with this sort of chart. But maybe this is the first step in the right direction for McPhersons. Coming in at number 4. Now, coming number 3, we have a silver company, Sun Silver. I did get an email about this, by the way, from, I think it was from Next Investors, and I deleted it straight away. I didn't have to read it because I knew exactly what it was about. I'm pretty sure it was Next Investors. I'm having a look at my what do you call it when you delete something? Trash, that's what you call it, trash. And it was from Next Investors, it was. In fact, the title of the email was, "It wasn't supposed to be like this." So Sun Silver. And the reason why they're a little bit excited and why the share price is up 7.1% is because reassays deliver over 20% higher silver grades. There you go. And I'm just reading their email. I didn't read it before. So they're excited, looks like. I wonder if they do get paid by Sun Silver. That is one of the problems with Next Investors and a few other of these sort of sites. They do get paid by the company to write good stories. Maybe it's not with Sun Silver, but they do get that. Anyway, so deliver over 20% of higher silver grades. The other thing really relevant for Sun Silver is silver prices. That's the other thing. So 25% higher silver grades overall, 22% uplift for silver grades between 10 grams and 100 grams, and 26% uplift for silver grades above 100 grams per ton. Potential to upgrade the silver component of Maverick Springs mineral resource if this trend continues across a broader data set. So there could be further good news coming for this company in the future. Okay, and the other thing is silver prices, of course. So let's have a look at the silver chart. If I can find it, here it is. And a beautiful chart. A beautiful chart. This is exactly the chart I am looking for. A nice chart for silver. So that means Sun Silver, SS1, this chart should be looking good. And it does. Really nice week for Sun Silver, by the way. In fact, looks like the share price might be up a fair bit, 32.5%. Share price getting back up to the highs this company saw back in October 2024. Yeah, so a really nice chart, nice volume coming through as well. And that's what I'm going to talk about when it comes to Sun Silver. Not the company for me. I do like the chart, so maybe a trade, but not the company for me because it's still a story stock. Okay, coming in at number 2, we have Yancoal. Share price down 6.13%. They released their quarterly activity report last night at 6:48 p.m. I didn't really care about this. And then I did see in Couple of Brief that the Yancoal share price was down. Then I had a look and I was like, oh, that's down 6%. It's a fair bit. So maybe I should pay a little bit more attention to this particular report. Now, in Couple of Brief, they mentioned the reason why the share price is down was because they reported lower sales. Yeah, they mentioned here the dip in sales was attributed to, well, no, that's what I don't know. Okay, so overnight, Yancoal reported a 12% rise in raw unprocessed coal production quarter over quarter, but saw attributable sale production fall 1% and sales volume drop 3.1%. Not sure if I completely agree with that, but I think one of the reasons why the share price might have pulled back a little bit more than what you might expect is because of some of their commentary. So they do mention why the attributable sales were down. So for instance, saleable coal matched the prior quarter. The mines operated to plan after some weather disruptions. Although attributable sales were lower than production due to temporary port closures following the weather events, we expect to reduce accumulated inventory and fully recover the sales position in September. So it's not really that significant, to be honest with you. They just sold a little bit less, but then they're going to make up that shortfall in the next few quarters. I think it's mostly to do with the commentary. And what I mean by that, if we go have a look at the CEC acting CEO comments, the second paragraph is he mentions, or she mentions, international coal indices faced a soft pricing environment due to strong supply and subdued demand in both the thermal and metallurgical coal markets, volatility and economic uncertainty stemming from geopolitical events in the Middle East and implementation of global trade. Tariffs bolstered speculative trading activity, but have not impacted underlying demand factors at this time. During such conditions, we focus on maximizing our operational efficiency and minimizing costs to navigate the current cyclical low in coal prices. But what I do like after this is a little bit of commentary that's suggesting that maybe the cycle is starting to turn a little bit more favorable. So he mentioned, or she mentions, we are beginning to see supply side response to the lower coal prices. So that means some of the higher cost producers don't see any reason to be mining, so they stop production or they mothball their mines. So he continues, or she continues, which aligns with our view that coal indices are well below marginal costs on the global cost curve. We anticipate further supply side reductions from higher cost producers contributing to a potential recovery in coal price indices, as was the case with past coal price cycles. Exactly the way it works. That's the way mining works. So that's why it's highly cyclical, because you get, it's all based off supply. Sometimes demand can changes in demand can happen, but it's mostly because of supply. So I don't know if you ever thought about this, but if you think so for instance, coal is going bananas right now, or silver going bananas. So what you'll see is a few mining exploring companies go, well, that's where we should be in gold and silver right now. So they will start maybe exploring a few gold or silver mines that were maybe in mothballs, start to go back into production. So you see more and more supply on the market. And if demand doesn't change, eventually supply might overtake demand. So if you get more supply than demand, what happens to prices? They start to drop and drop and drop. And this is what happened to lithium over the past few years. A massive amount of supply on the market. Demand was enough to keep up. So prices of lithium fell. And now prices of lithium are maybe at the low. And a lot of these lithium mining exploring companies are going elsewhere, searching for uranium or whatever. And eventually we'll see a lack of supply of lithium and the demand will increase. And then eventually, with demand significantly above supply, what happens? Well, supply needs to, prices will go up. because demand supply dynamics, and then eventually to meet up with that, because the prices are increasing, we'll see more and more supply coming to the market because companies are attracted to that. Oh, look at the price of this commodity. Look at the margins these lithium producers are getting. So that's the cycle of commodities, of these sort of companies. And that's exactly what they're talking about here, that they do think it's starting to shift in their favor. So let's have a look. Oh, by the way, I'm also now a coal company owner. I bought some Whitehaven coal. And let's have a look at, which I think one of the reasons why I like the chart, and I think this could be near the bottom. In fact, I bought Whitehaven before I read this. Okay, so let's have a look at the chart for Yancoal. I have owned Yancoal in the past. Again, I do think these are just trades. Is this chart interesting? And in fact, if you ever look at the long-term chart for Yancoal, you can see just cycles in this. In fact, you can definitely see the cycles in like Whitehaven and New Hope. Look at that. Beautiful. Bottom of the cycle in February 2016, top of the cycle in July 2018, bottom of the cycle in September 2020, top of the cycle in October 2022, and maybe we're near the bottom. Okay. Now on to stock of the day. And this was probably the easiest decision I've ever had to make in my life, apart from that year one math tests where I was given 2 + 3. I was like, what? That's the easiest question ever. It's 6. I think it was 2 times 3, and I said 5. Okay, now Mesoblast share price up 36.31% on their Appendix 4C. They released at 9:58 a.m. Okay, now as I said, I have said previously that when I open up an Appendix 4C or 5B, I go straight to the quarterly report, and if you have a look. Straight to the Appendix 4C. And if you have a look at receipts, it's only 1.178 million. It's not a lot. They've started to sell their product, Remplia. Is it called Remplia? I'm pretty sure it's Remplia. Remplia. Ryan Seal. What's Remplia? I forget. It all just blurs together. So 1.178, and I was like, okay. Not a massive shock, even though they are selling a product, but a lot of times there is a time difference between revenue and receipts. So you recognize a revenue at a lot of times at an early stage than when you recognize receipts, because receipts is cash coming in. Sometimes there might be a 60, 90-day delay between revenue recognition and receipts recognition. It sort of makes sense. Really makes sense. So this is why it's really important to have a look at commentary, because sometimes when there is that discrepancy between timing of receipts and revenue, they will mention revenue. And that's exactly what Mesoblast have done. So started selling, I still want to say Remplia, started selling Ryan Seal, and they mentioned revenue. So 13.2 million, by the way, they do, all their financials are in US dollars. So 13.2 million gross revenue from sales of Ryan Seal post-launch March 28. They also have a 1.6 million revenue from royalties on sales of Temsil in Japan, and 16.6 million net operating cash spend for the quarter. So I think this was better than the market expected. I did have a look at Hot Copper just to see what they were thinking, and yeah, there were apparently some people were thinking of what was acceptable, and this was better than expected, probably from not only shareholders but also from the market. So $13.2 million in gross revenue. So if you, and they also have a lot of cash. But if you go back here, have a look at the operating cash flow. The company could be moving towards, I wouldn't say just yet, but they're moving towards operating cash flow positiveness. So they're getting towards that inflection point. So this could be, I wouldn't say this is a turning point for the company. I think this happened quite a few months ago. In fact, I took a long-term position in Mesoblast when they did receive FDA approval. I think that was the turning point for the company. And now we're seeing the benefits of that FDA approval coming through in their financials. Now the question becomes, when can they become profitable? Yes, and when can they start generating a lot of cash flow and pump that money back into the company? That's when it becomes really exciting for a company like this, because they won't have to go back to the market for more money, which this company has done time and time and time again. So I do think we are moving towards a really interesting point for Mesoblast. Anyway, and I have no reason to even think about selling out of this company. I haven't gone through the rest of this, but I will later. Okay. And the other thing is they have some more possible FDA approvals coming ahead for the company. So really exciting times for the company. Okay, now onto the chart. So in my opinion, the time to have got really excited about this company, maybe not really excited, but the time that turned this company from just a story stock into one that it is more than a story stock now, was back when they received FDA approval. Was that 19th of December? I think it was. You can see the share price actually had fallen. So I think a little bit of negative sentiment drove the share price down to $1.60. And then what we've seen today is, I think, the start of an exciting period for Mesoblast. But in my opinion, it started last December. But this was like the first sort of proof that things are moving in the right direction for the company. Anyway, so congratulations to those who bought at like $1.60. There was definitely a nice little support level at that price. Yeah, look at that. Beautiful support level going back to last October. Okay, so that's definitely a stock of the day. By the way, that one-day candlestick looks very similar to this one here back in December. Share price up on that day 54%. So, yeah, FDA approval. Okay, so that's stock of the day, Mesoblast. So I do own Mesoblast now. Will I trade this? Possibly. I'm thinking about it. I am thinking about it. This is sort of the signal I am looking for. I would like a little bit higher volume, maybe, but it's a beautiful one-day candlestick, positive news, exactly what I'm looking for. Okay, now onto the chart of the day, and I've got IGO. Pretty sure IGO is lithium as well. Lithium and a few others as well. Nickel, copper, cobalt, and lithium. There we go. Nova, nickel, copper, cobalt. So they are diversified, but definitely a little bit of lithium in there. Share price, long-term downtrend. So really, the share price moved to downtrend back sometime in August, September of 2023. And again, this was a chart where there was no reason to get in. In fact, the 25-day moving average has been acting as resistance since then. You can see share price getting to the 25-day moving average back in May last year. And you can see it about 5 or 6 times, then fell away. It got back up to that moving average back in October, fell away. Sort of a false break above that level back in January of this year, then fell away. And finally, I think we have seen a bit of a breakout for IGO. We've had a moving average crossover. Share price is now moving into an uptrend. And the share price is at February, March, 5-month high. I do prefer a 6-month high. I will take a 3-month high, but I do prefer a 6-month high. The best of the longest, how do you say this? The longest, I don't even know how to say it. The greater the share price, the greater long-term high, the greater the long-term high is in time, the more likely the share price will keep on moving an uptrend. I'm saying this terribly. The greater the long-term high, the better chance the share price will keep on moving up in an uptrend, because there's going to be less resistance, because a lot of the shareholders who had bought at higher prices in the past probably already out. They're probably already out. So that's why if a share price has broken out to a 1-year high, less resistance. And you can see that just with the share price moving into an uptrend. You see this time and time again. So the longer, the greater the amount of time has expired since the previous high is good. So I will take a 5-month high, but I do prefer longer. But anyway, share price at a 5-month high. Yeah, it's a nice looking chart. Nice looking chart for IGO. Okay, that is all I have for this particular ASX Daily Rundown view. Exciting day. I think we have seen a bit of breakout for the XJO. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.